Welcome to Robotics and Automation News webinars, where you can be part of a global event without leaving your home or office. Attend our live webinars and communicate directly with influential professionals in your industry.
Hello, my name is Abdul Montakim. I'm editor of Robotics and Automation News.com. In this interview, I speak to Pedro Paladani, research analyst at Global X, which is an investment company with a number of exchange-traded funds, or ETFs, geared towards the robotics, automation, and artificial intelligence sectors. Global X sponsors at least 10 ETFs, which are oriented towards technology. One of them is called BOTZ, BOTZ, a robotics and artificial intelligence ETF, which currently has approximately $1.5 billion in net assets, having started with a small fraction of that amount. Another is called DRIV, an autonomous and electric vehicles ETF, which has more than $17.5 billion in net assets under management.
Thanks for having me today. My name is Pedro Palandrani. I'm a thematic research analyst at Global X ETFs. Global X is an ETF issuer based out of Manhattan, New York. We have approximately 70 ETFs and more than 12 billion in assets under management. And Global X was founded back in 2008, really with the idea to provide unexplored and intelligent investment solutions to investors around the world. And many people today know Global X for rapidly growing thematic ETF suite, which basically consists of 17 individual ETFs. You can think about investment themes such as artificial intelligence or robotics, which we're going to be talking about today, but other themes as well, like Internet of Things, cloud computing, fintech, social media, and many other themes, right? So we really see ourselves as leaders in thematic investing in the ETF industry. So happy to be here talking to you today.
Great, thank you. Good to talk to you too. Let me ask you a couple of basic questions to get to know the Global X. Is there more than one Global X around? Because I've just pulled up a press release that I received a couple of years ago, I think, or last year, Global X funds. Is there more than one Global X around?
No, we're unique. One Global X, again, founded back in 2008. We're based out of New York. The company got acquired by Mirai Asset in 2018. So we also have a strong international exposure. We're US-based company. Certainly, investors can access our investment solutions around the world. But to answer your question, just one Global X.
Right, okay. There are quite a few different funds and ETFs that are similar to yours, I suppose, in the sense that they invest in robotics and artificial intelligence and things like that. Can you give us an overview of that kind of market and what you know of perhaps your competitors or the market in general?
Yeah, no, absolutely. So our ETF, the Global X Robotics and Artificial Intelligence ETF, the ticker is BOTZ. We like to call it BOTZ. It really seeks to invest in companies throughout the supply chain of robotics and artificial intelligence, right? So we really are trying to get exposure to companies in 4 different segments. The industrial segment, all these companies that are producing or manufacturing robots for the industrial segment, certainly the auto industry being a big part of that market, consumer electronics, another one. But then we have other 3 segments, right? The non-industrial segment, and you can think about healthcare with robotic surgery, or agriculture with robots or picking and harvesting crops around the world, right? So that's the second segment, the non-industrial segment, in which we're actually seeing a lot of growth, and we can talk about that a little bit more. And the two other segments are artificial intelligence companies, and the last one is the drones and autonomous or intelligent robots, right? So those are the four different segments in which we're trying to provide exposure to via our Global X robotics and artificial intelligence ETF. And again, we're the largest ETF in the space for the robotics and artificial intelligence industry. We're the largest here in the United States, and this is kind of the exposure that our ETF provides.
Right, and you were saying, you mentioned a couple of numbers about the investment, I think, or rather the assets under management, which is quite a massive number. As I say, I've found a press release dating back to April 2018, which says you had $3.91 billion in assets under management. And I think you mentioned earlier that it's something like 12 billion now, so it's a lot more. Is that probably both investors, new investors coming to you and investing their money, as well as the assets that you've already invested in increasing in value? So give us an overview. And I've also read reports about the success of ETFs like yours, specifically yours actually. So give us an insight into how things have grown for you in the last couple of years.
Yeah, no, absolutely. Just to make sure we get the data right? So in total, we manage about $12 billion, and this is across 70 different ETFs. For the robotics and artificial intelligence one, that's our biggest fund. And again, it's the largest US ETF that provides exposure to the robotics and artificial intelligence segment. That's about 1.5 billion in assets under management. For our thematic suite, that is comprised about 17 individual ETFs, like I mentioned before. It's about $4 billion, certainly one of the largest suites here at Global X ETFs. Certainly the industry as a whole, the ETF industry has been growing quite a bit. The ETF has become an investment vehicle of choice for investors around the world. It provides a transparent investment solution. It also has some tax efficiency features that are very attractive for investors around the world. And the ETF industry is growing now to be over $4 trillion market. So thematic investing, including the robotics and artificial intelligence segment, is still a very low or very small part of the huge industry of ETF, but it's a fast growing segment, right? We're certainly seeing a lot of interest from investors in this area as they're trying to capture growth opportunities in an economy in which we might not be seeing a lot of growth in our traditional economy, right? So if you think about the industrial traditional sector of our economy, there might be areas of slacking growth. So by providing exposure and investment solution to robotics and artificial intelligence segment that it's completely disrupting the industrial segment as we know it, we're really providing growth opportunities for investors around the world, right? And robotics today is such a small market. You know, in average, there are about 100 robots per each 10,000 manufacturing employees around the world. So that's about 1% robotic density around the world. Certainly countries like South Korea or Singapore have a greater robotic density to about 7%, but it's still very low numbers. So the growth opportunities are quite vast in this segment. That's certainly one of the things that investors are looking at right now, They're trying to capture those growth opportunities that exist in today's economy. And like I said, it's not only about robotics and artificial intelligence, but it's about the Internet of Things, right? And how that's transforming completely the infrastructure that we have today. Or fintech related companies are transforming the financial services sector, and so on, right? You can think about video games and esports really transforming the communication services industry. It has become the new social media outlet for many people around the world. So these are sectors that are disrupting the traditional economy, and we're really providing investors with unique solutions so they can get access to these fast growing segments within our economy.
Right, and I wanted to ask you about what kind of companies your fund invests in, and why you decide to invest in them. And so just to explain to the audience who might not be familiar with funds or ETFs, they're basically a basket of shares, a number of different shares in different companies, which constitutes a fund. And maybe you can explain the subtle difference with what an ETF is. But I wanted to ask you specifically about the kind of companies you invest in. I see in your top 10 holdings on your website, you've got very, very well-known names like NVIDIA and ABB. And then, all I think 7 or 8 of them are very, very well-known companies. There's 1 or 2 that aren't so well-known. But that's your top 10 holdings. And I was just wondering how many startups and other types of companies that you might have, as well as these very well-established companies.
Sure. So to start with your first question about the ETF as an investment vehicle, certainly ETF stands for exchange traded fund, right? And it's basically, like you say, a basket of multiple stocks that trade on an exchange, just like a stock, right? And it really provides access to different themes, sectors, industries, factors, and so on, in a very transparent and diversified way. And like I said at the very beginning, on a tax efficient manner, which is so important for investors. So investors can really get access to the ETF very easily, and they can really get a diversified exposure to the themes that they like the most, right? Or they feel more they have high conviction about when it comes to investing. And then we get exposure, or the way that we try to build these ETFs is to really provide targeted exposure to the themes in regards, right? So this is very important. We're trying to provide exposure to companies that generate over 50% of their revenue to the theme in regard. So here for the robotics and artificial intelligence theme, we're really trying to provide exposure to companies that are pure plays in the robotics and artificial intelligence segment. So every company that you get to see here, not only the top 10 holdings like that you were describing, but all the companies within the fund have to generate over 50% revenue from robotics and artificial intelligence. We then also implement other investment criteria, such as a minimum market cap or a liquidity requirements, which are important for the construction of the ETF structure, right? So the companies that are going to be in that ETF are really public companies, right? So you're not going to get to see private companies or startups just because the ETF structure is a vehicle to capture public companies. So that's a very important consideration. But something that it's very relevant and important within the ETF structure is that you're still getting exposure to smaller companies. It's not only the NVIDIAs of the world or the ABBs, like you were saying, Fanuc in Japan, very large and well known robotics companies. But there are also very smaller ones, are public companies, but they're trying to capture growth opportunities in many of these different segments within the robotics industries. You can think about iRobot, like a company that is trying to really penetrate the consumer market by providing different robotic solutions, right? So the robotics market is quite a big one. It's a very large one. It's not only the industrial segment like we were talking about, because when we think about robotics, or people may think about large robotic arms welding a vehicle together, right? But it's so much more than that. It's also the robots are taking the fields in the agriculture segment, right? The increased dexterity of robotics are making now possible that with the end of arm tooling, also known as effectors, now robots can really pick and harvest crops at a precision that has never been seen, right? So it's a very large market, and we're trying to provide exposure to the overall segment here. And like I said at the very beginning, basically four segments: the industrial segment, the non-industrial segment, the artificial intelligence one, and the drones and smart robots or smart vehicles as well. So that's basically the overall view here of the kind of the investment case that we think and we implement here at Global X.
Okay, and finally, how do you see the future for funds like yours? And in terms of, do you think more companies are going to emerge, startups are going to become more successful, and you're going to have the opportunity to invest in those? Or do you think the companies that you already are investing in, the established ones, are going to grow? Or is it both? Or what? How do you see the future over the next, say, 3 to 5 years?
Yeah, no, great question. So I would say that there are two different factors here, right? One being that many of these robotics companies, startups, and very kind of the unicorns start rising around the world to try to capture the growth opportunities in the robotics and artificial intelligence space. They're going public. Many of these companies are starting to go public, raising some capital so they can continue to invest in their own businesses, right? The other factor that it's also playing an important role is the M&A activity or merger and acquisition activity that we're seeing in the space, where large robotics companies like the Japanese companies are leaders in the space, also some US-based companies, they're acquiring all these small players or very niche robotic companies are targeting very kind of niche verticals within the robotics segment, right? So those are two key trends that we're seeing in the space, and that we expect to continue in the midterm as well. And that's going to help us to continue to participate in growth opportunities of many of these small related companies, right? So, and then from the investor perspective, the interest continues to be there. Investors really want to get access to robotics and artificial intelligence companies, because they understand the growth opportunities, and they want to participate in that, right? So they want to try to get involved in many of the trends that we're seeing. So that's what's very important to understand. When people is looking the proliferation of robots in their own lives, they understand that growth opportunity and they want to participate, right? And certainly we can talk about some of the trends that we're seeing in robotics and AI today.
Right, and one last bonus question, if you don't mind.
Yeah.
What do you think is driving growth in the sector in terms of perhaps revenue for the companies? Yeah, and maybe think about it from this very simplistic point of view of, is it the software-oriented companies that are seeing faster growth because software is perhaps more in demand, or is it the hardware-oriented companies that are seeing more growth? Is it like an identifiable uh, trend or reason for companies growing, or is it just because the market is just growing and there's too many different things going on to identify any patterns?
Yeah, no, sure. So certainly there are many key drivers for both the software component, the artificial intelligence, the machine learning component, and also the hardware part. It's really a combination of both where we're seeing the growth, right? And then you have aging populations around the world, you have a rising wages as well, and companies really try to increase their productivity. All of that is driving growth opportunities for the robotics and artificial intelligence space. Then just by looking at the software related segment, one of the most interesting things that we're seeing is the introduction of digital AI simulators, or also known as digital twins, right? Where it's really used for robotic training and improvement, right? In the past, training robotics was very laborious and required time, capital, and a lot of engineering expertise. But AI simulators today are becoming increasingly accurate at transferring learning to the real world applications, right? So these simulators can run thousands of iterative processes in just a matter of seconds, creating large amounts of data, training data, that only until now, very recently really, we're overcoming a discrepancy between simulated applications and the transferring of those applications and training data to real world, right? So that has become an important part of the robotics industry, and that's why kind of that a combination of software and hardware is so important, right? Then on the hardware side, you're really seeing a lot of growth opportunities coming from that increased dexterity from the end of arm toolings of these robots, right? The rise of cobots or collaborative robots have become so important, right? And then you also have companies in the semiconductor space that are coming up with top-notch GPU technology that it's really driving and making a strong impact in the overall robotics industry, also in the artificial intelligence for sure. But and here we can talk about conversational AI, for example, that really today robots in artificial intelligence can really process natural language understanding at a level that it's becoming very close to the human one, right? And when you have that, you can really transfer information from humans to robots, and robots now can process and understand and really make a decision based on that information that they're getting. So there are a lot of growth drivers around the world today, both, like I say, from the hardware perspective and the software perspective. So we really feel like investing in the overall supply chain of robotics, the many different segments, is the appropriate way to do it, right? So you're participating in all these many growth opportunities, and again, supported by also demographic changes in our economy. You can think about countries like Japan that is experiencing an aging population. In order to keep up with productivity, companies really are investing in robotics and AI as a solution, right? So that's an important consideration to have here.
Okay, thank you very much, Pedro, for your time and great insights. Thank you very much.
Thank you, Abdul. Thank you.
Send us an email at sales@roboticsandautomationnews.com to register for one of our many upcoming webinars. And if you'd like us to host your webinar, we have a range of options, including long-term lead generation packages and marketing campaigns. We look forward to hearing from you soon.